Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites, PIFinancial.com and PolarFuturesGroup.com. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Drew, market volatility has been jumping. Daily price swings have been massive. The central banks and governments injecting huge amounts of stimulus. As of today, are we just in the midst of a huge two-day run in the equity market? Does this look like a turnaround for you, or is this just more of the same old same?
Yeah, I think that's a very poignant question. I've been getting asked that a lot with clients saying, was this the buying opportunity? Do we need to be in stocks now? I think this is more of a relief rally, from what I'm looking at. What I like to see when we have key turns in markets is we're seeing a lot of markets turn rather than just the singular market that is equities that everybody's focused on. So, we had the initial jump on Monday when the Fed unveiled their next level of QE. The market wasn't able to hold up any strong bids on that, but yesterday, as we got word that the government's fiscal package was going to go through, we had a very strong rally yesterday that followed through with a very strong rally today. As we're recording now, we're right on the highs of the day. To me, this still has the sense and the feel more of a relief rally. We're not seeing a confirmation in the bond market. The bonds are still very well bid. They're almost unchanged over the last couple of days, even though equities have had a very strong run to the upside. I would be a little more inclined to believe this equity market has legs to the upside if we saw bonds moving lower. You do have the added edge that this big government package will also be increasing the bond supply by a tremendous amount. So that alone should be pushing bonds lower. So the fact that bonds are staying as well bid as they are tells me that this equity market may have a little bit more uncertainty ahead of it. The oil market, while doing a little bit better, hasn't been screaming to the upside to the same degree. That would give me a little bit more confidence that, the market's viewing the economy has turned and equities could again, hold on to this run. So I'm a little bit skeptical of this relief rally is what I would call it right now. I would be worried that, we could likely get some more bad news. We're going to get the first sort of initial claims number tomorrow morning in the U.S. that's tied to the coronavirus. It was up a little bit last week, but again, that wasn't the full force of what we were going to see over this past week. We know the number in Canada was massive, with over 1 million people claiming EI. So if we got that sort of number, I think there's really a level of fear that could come back into this market. You'd get people that, really took advantage of this last rally. I mean, these rallies are incredibly sharp, so they're big on a percentage gain. You may have people saying thank you very much, and that could cause us to sell and roll over. And then, as always, we can see on Friday, what type of positions are people willing to sit with going to the weekend. Given this environment, people just want to go into the weekend with a lot less risk. So if they've been buyers of this rally, I think they want to get out before the end of the weekend. So I think we could soften from here. Again, the big test on this relief rally for me will be, where do we find support? If we're able to find support above the lows of Monday, that would be great. I'd have a lot more confidence that, as we go into next week, maybe we've seen the lows in place. So that's what I'm looking for in the equity market.
We'll have more with Drew Zimmerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, what are the markets you're watching that might signify a turn in markets?
Yeah, as I mentioned earlier, it's more not an individual market that needs to turn or hit a certain level. What I like to see is markets acting in unison. When we see a lot of key turn dates, if you go back in history, we'll see that a lot of different assets will turn on that same day. So, if we saw the currency markets all make a significant turn, if we saw, some of the commodity markets all make a turn on a day, the bond markets and equity markets, all go more into a risk on sort of trading mode on a specific day. That is a much more important day for me than what I would say in the last couple of days has been more focused in the equity market. Now, we have seen some of the risk-off currencies, like the Canadian dollar, the Australian dollar, New Zealand dollar, Mexican peso, rally in the last couple of days along with equities. So that is a bit of a positive. But at the same time, we haven't seen some of the risk-off currencies, really fall apart either. The Japanese yen has stayed fairly well bid. As I was mentioning earlier, the bond market's still staying very well bid. Oil's been doing a little better, but, relative to equities underperforming. So there just hasn't been that key turn that really sticks out across markets to allow me to think that this has been a key turn date. I'll continue to monitor that, and we don't always get that. So, you can't always live by one playbook, because as soon as you figure that playbook out, the market will do something else to surprise you. But I am treating this more of as a relief rally rather than a key turn. But again, I may be corrected on that as we go into the end of this week if some of the other markets show that, they're following suit with sort of risk off trading and willing to bid up riskier assets. So stay tuned, but I don't see that just yet.
What have you been doing to take advantage of these volatile markets?
Yeah, it's been a very active several weeks for me. My markets that I trade in are the futures and options markets, so we are a very levered market, so you need to be very aware of the risk that you have on. But at the same time, I think there's, very efficient and effective ways to manage that risk and try and capitalize on some of these larger market moves. So with the big drawdown that we saw in crude oil, I've established a long position in crude oil. Now, I will preface that with the crude oil market has a lot of nuances to it right now. The very front months are very much more sold than the back months. So we trade crude oil on monthly contracts. You need to be careful of the contango. That's the front month is going a lot lower than some of the back months in oil. So I own some of those back months in oil because a lot of this demand destruction that the market is pricing in belongs in those first couple of months of oil, where there's actually some worry about where do we store all this oil if we're not going to use enough of it. I don't think we're going to get into that type of a situation, but that's still going to keep more price pressure, downward pressure on those front months. So again, knowing a little bit more about the crude oil market, knowing to go out a few months where you think the market will be back to a more normalized state, I think is a good play. You're still able to take advantage of the large sell-off that we've seen in crude oil at these prices. I had been short the equity market as well. I used a lot of options there. I actually reversed that briefly and was bullish yesterday. I closed that out at the end of the day yesterday, again with just the size of these market moves that we're seeing on a daily basis. I think it's important that you manage your risk and take some of those winners quickly when you get them. And again, the winners that we're seeing in a day used to take us, several weeks to realize that sort of a market move. So it's just happening quickly, which is why when you have things that are working, I would in this environment recommend, taking some gains rather quickly. I don't have a whole lot on outside of that. I do have a small position in the Japanese yen. Again, that's sort of looking for this market to maybe roll over and fall a little bit. That would be a risk-off trade. The Canadian dollar also rallying back to 70.5 cents, I think is vulnerable. I think there's still the possibility, especially with oil prices where they are, that the Bank of Canada could come out and cut rates further. I think that would take some of the recent bids out of the Canadian dollar as they just sort of align their Bank of Canada rates with the Fed. So in the currency space, this U.S. dollar had a very strong run for a couple of weeks. We got back to the highs of the end of 2016. I think this is natural to see it fall back a little bit. I'll be watching to see that this was just a correction rather than a change in trend for the U.S. dollar, because this U.S. dollar is just so important in what we're seeing sort of across the board and in a lot of commodities. And that's another area that I'm really looking at here in the last week. And I mean, the wheat market, I know that's not a mainstream market for a lot of people to follow, but I mean, it has just been on fire for the last week, a lot of strength there. So I'm looking at some of the other commodity markets that maybe haven't been bid up as well. A softer U.S. dollar helps those markets do better as well. And we still maybe have, even more demand domestically for our own wheat if there's going to be less global trade in the near term. So that's something to keep an eye on as well. But the biggest thing I could say is, trade small, trade less than you would, when markets are moving like this. You really have to be careful, of risk management. Take wins when you get them. And just take what the market gives you rather than trying to go for what you think the market should give you. That's sort of one of the one-liners that I always have on my screen is to participate with the market rather than trying to direct the market.
We'll have more with Drew Zimmerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, do you think the gold market is something everyone needs to own?
Yes, I would argue over the medium to long term, I think there's just been an incredible reason to buy gold. And that, for that matter, a lot of, fixed assets. I think when you look at the amount of money that the central banks globally have just pumped into the system, the amount of fiscal stimulus that's getting pumped into the system, not just on a relative, one currency versus the other currency, but just all currencies, I think will go down in value on this. I think this is an incredibly inflationary push that the central banks and the governments are putting into the markets. But I would say the caveat on that is near term, the effects of the coronavirus and everybody being locked in their houses is still got some deflationary edge to it. So we've seen, in the past 2 days, Monday, Tuesday, just incredible moves in the gold market. I mean, the fact that we went from, it was only a few days ago, we were at $1,450 and we retested $1,700 on the high end. So I don't love it on a short-term basis just because it's just had a massive spike higher right back to the highs. I do think that, if equities, pull back and are able to sort of gather themselves in a much more stable manner, I think it would be much more constructive for the equity market to have some reasonable up days rather than these, 5 to 10% surges that we've seen in the last 2 days. That would also show more stability in the market. I think that would, again, allow people to get back into the equity market. And I think if we see funds flowing back into the equity market, that could still take an edge off this gold market, especially if we were to see rates moving up at that same time, if we were to see bonds selling off like I think we should. So I think there's possibly another pullback in this gold market, but I was wrong when we were at 1450. I thought we would see a further pullback. So unfortunately, I've missed this last run. I do want to be in this gold market for the next 6 months to a few years. I think that's the sort of time frame you have to look at it. So if you've got an account size where you can scale in, getting in at 1600, if we pull back to 1550, adding more, 1500, adding more, that sort of a strategy, it's worth getting into now before you just don't have a gold position and it just keeps running higher. So I do think everybody should own some gold. I think it just depends on your account size and your situation of how you add to it. I'm going to be looking for a little bit more of a pullback. Like I say, I think if we start to sense the bottom in equities, whether that's the end of this week or maybe into next week, then that may be the near-term high for gold, and it will present some better entry opportunity.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. If you have any questions for Drew or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.